Meta Platforms is set to reach new highs, and we're here to discuss why. Let's get started. Thomas, you called for Meta Platforms to reach new highs in 2024, and I just read about that in your article on Market Beat. So let's dig into the specifics here, of course. That's what we're here for. Tell us, why are new highs on the horizon?
Well, right now, Meta is working its way through, and no pun intended, some technical difficulties. I don't mean this with the business, but with the chart. The stock rallied like 260% from its lows. It's only had two corrections since then. That's not very many. Those were worth 12.5% and 15% respectively, and they did very little to slow down the market momentum. So the post-release activity is consistent with that second correction, but we're already seeing signs of support. So what we're really seeing is a consolidation. And I think that we're likely to move higher from this level for many reasons.
All right, well, let's get into these reasons. It looks like Meta had a blowout quarter. Chris, what is sticking out to you here?
Well, Meta was one of the first companies to start cutting back on staff, doing other cost containment measures, and that was in the first part of the year. And so that's flowing through to the bottom line. You see that. I see the same thing that Thomas is seeing. The company's already this year made two runs up to around that $400 or $340 level, or $330, excuse me, which is a 52-week high. Maybe this third time is the charm as it's getting there. And with a forward PE of 21 times, investors aren't paying too much right now for a stock that's supposed to be a premium stock in the tech sector. We'll just have to see. Institutional investors aren't going to want to be on the wrong side of this. It's an interesting point that, let's just say it's an interesting point where Meta's stock is at right now.
Thomas, let's touch on Meta's mega margin expansion. As strong as the user counts and ad metrics are, the margin news is even better here, and significant improvements have been observed. So give us the rundown.
Yeah, right. This is really a dual tailwind story for the margin. Like Chris was saying, in the first part of the year, they're leaning into efficiency. They've produced some pretty significant operational improvements that are aiding the margin. On top of that, they've been able to reestablish like user growth and revenue growth. So they've got revenue leverage as well. So they're having kind of this double boost to their earnings. AI is helping that. I think that they could easily outpace what are already robust estimates for next year. I think the analysts are looking for 12% top line growth and a 20% gain in earnings. I think that could be pretty cautious.
Chris, are there any unique strategies that Meta is employing that we should be keeping our eye out for that could affect the stock, or are there specific risks maybe here?
Yeah, and I don't know whether to categorize this as an opportunity or a risk. I'm not really sure. But one thing that I've noticed and read about with Meta in the past couple of weeks is that they're adopting what I'm going to call the reverse Netflix strategy. We were talking about Netflix on the channel a little while ago, and we were commenting about how Netflix is aggressively leaning into ad-supported revenue, and it's kind of at the expense, if you want to call it that, of the user experience, because now instead of consumers being able to view their content ad-free, they're accepting being willing to pay this $6.99, or I think that's the fee, for getting an ad-interrupted experience. Now, Meta's doing something pretty interesting. They're at least launching it over in Europe. They're promoting where their consumers would pay a fee to get an ad-free experience on their platform. Now, they're doing this to stay on the right side of European Union regulators who are trying to look at privacy issues with regard to, data and all that. It'll be interesting to me to see how that works, and if there's an appetite among their audience to actually pay to be on their platforms in order to get an ad-free experience. I'm not sure. It's kind of interesting. It's something to look into.
Well, I always see people sharing those things on Facebook that's like, if you share this, like someone will see that you've shared this and that your data won't get stolen. So I don't know if they're falling for that. Maybe they'll hook onto that. We'll see. But Thomas, let's quickly cover the technical outlook for Meta. How does the critical support level play into the potential rebound or the further decline?
Well, the market is bouncing pretty strongly from that level right now with some strength, and you can see it clearly on the chart. Let's look at that. All right. So here's that 12% correction I was talking about. We've corrected since the earnings report back down to the same level, and we're showing pretty solid bounce right here. Support at this critical level and at the 150-day moving average. As for how high we go, the ceiling right now is about 325. But I want to point out that the analysts, the most recent, freshest targets over the last 2 months, see the stock trading between 335 and 435, which is well above current levels. I think that Meta will probably set a new 12-month high pretty soon. It'll probably retest 325, maybe by the end of the year, probably first part of next year. I think that if the analysts don't start trimming their targets, we'll see a new all-time high early in 2024.
Well, Meta is a stock that is fun to watch. So to our viewers, you can be assured we will be keeping you up to date on this one and many more right here at Market Beat. Leave us a comment. Let us know where you're watching from and if this video analysis was helpful for you. Thank you so much again for watching. Don't forget to check out the other analysis right on this page, and we'll see you in the next one. Thanks, guys.